What's up, guys? So some of you may be wondering why SoFi stock is trading down 6.5% after hours trading. And we're going to go over that real quick so you know what to expect. So SoFi Technologies announced a public offering of common stock. SoFi Technologies announced on Tuesday, this was after market close, an underwritten public offering of $1.5 billion of shares of its common stock. In connection with the offering, SoFi expects to grant the underwriter a 30-day option to purchase up to an additional 15% of the shares of common stock offered in the offering. All the shares of common stock in the offering will be sold by SoFi. SoFi intends to use the net proceeds from the offering for general corporate purposes, including working capital and other business opportunities. And the underwriter for that public offering is Goldman Sachs. To reiterate here, in connection with the offering, SoFi expects to grant the underwriter a 30-day option to purchase up to an additional 15% of the shares of common stock offered in the offering. And that underwriter here is Goldman Sachs. They will act as the underwriter in the offering. They're trying to generate more cash, and on their balance sheet, as of this most recent earnings report, they have over $2 billion in cash and cash equivalents. So it's interesting to see. After such a phenomenal earnings report, they really had incredible numbers. You had upgraded guidance. You had a beat on revenue. It was a very impressive earnings report from this company. It's interesting to see. I'm not really disappointed about this because $1.5 billion of cash, it'd be interesting to see what their aim is to use that for. And you could see this company grow even faster with more cash on hand. So I view this overall as a positive. It's not like the company's in a bad situation right now and they need cash to stay afloat. That's something you could see commonly with companies that are overall at a net loss with their earnings, but this company is profitable and they're looking to generate more cash to expand their business faster rather than try to bail themselves out in a way, which you've seen very often with very poor companies. So this is not overall a bad thing. Of course, it's going to impact the stock negatively because it does dilute current shareholders. But overall, this company is growing very fast. So I'm not too discouraged by this. Down 6.5% after hours. I personally own SoFi stock. I own $9,200 worth before market close. And I have an average cost position of 13.75. So I'm completely fine with holding my SoFi shares. I don't personally view this as a terrible thing. And I have a lot of faith in the company. I really like Anthony Noto as CEO. Mind you, Anthony Noto was a former Army officer. He went to Ranger School. I really like him. He's a great leader, great CEO. And I have a very optimistic view on this company long term, and I will continue holding my shares as long as the financial support the long-term growth and expectations for the company. So let me know your thoughts in the comments. If you have a similar opinion or if you disagree, if you got value from the video, consider subscribing to my channel, and y'all have a good one.